Welcome to the Personal Pension Radio Podcast, where it's all about helping you complete your financial journey to retirement. Discover time-tested strategies and get unconventional insights into wealth building and retirement that actually work. Break away from the herd and go for the retirement you dream of. And now, here's your host, the income engineer, Kraig Strom.
All right, here we go. Personal Pension Radio. Thank you so much for being here. I really appreciate it. Episode 139. Thank you all for your support, the questions, the feedback. Really do appreciate it. I appreciate wherever you're listening to this, in the car, while you're jogging, when you're at the gym, on a cruise ship, who knows where you are. Thank you so much for spending your time, a little bit of your time with me on this podcast. My mission as the income engineer is to bring this retirement income conversation to the forefront. It's to deliver the retirement dream that Wall Street promises, but unfortunately, mainstream financial advice doesn't actually go all the way to the retirement income conversation the way it really needs to. Wall Street spends a lot of time teaching us how to save, and invest, and very little time talking about how to take that money out. So my mission is to deliver that retirement dream that Wall Street promised. I am the income engineer. That's my passion. I want to talk to you about all things financial planning. And this show, I bring things to you that just come up in my world as a practicing financial planner. And I'll bring these things to you because these are the things that happen throughout my weeks and months, and they're the things that are on my radar. So before I forget, I always do a quick disclosure to make sure that you've got that first disclosure in the beginning of the show. I am not an attorney. I'm not a certified public accountant. I am a certified financial planning professional. With all that said, please don't act on things that you hear on this show as if you're hearing advice for you and your specific situation. And especially, please, dear me, don't act on advice that you hear from financial entertainers on the radio or podcast or TV. These are folks who are unlicensed, unregulated, and in many cases completely unqualified to be giving out financial advice. And yet, a lot of folks I've actually met, and I've run into them over the years, how did you make that financial decision? Oh, well, I heard it on this podcast. Well, you realize that person isn't even a licensed or regulated financial planner, right? And yet, I've heard folks many times over the years that have acted on things that they heard from financial entertainers. Please, meet with a qualified financial planner to discuss your specific situation. I would love that person to be me. I've lost track over the years of how many people from this podcast that I've been able to get to know, and some have actually become clients. And it doesn't matter where you live. I work with folks all over the United States through technology because we can be face-to-face on a go-to meeting just as quick as you can drive down the street to somebody's office nowadays. So geography is no longer a restriction. If you would like to meet and have a conversation about your specific situation, that's what I want to do first before you act on things that you hear on my show. Now, let's start off this week, segment one, if you will. I want to start before actually just a quick bonus segment that I've done before. This is my deal of the week. And I had a question come in that said, someone said, Kraig, I heard you say that you cut your own hair. That struck me as an extreme way to cut costs. What else do you do to save money? Great question. So I'm going to be brave and answer that one. Yes, if you haven't heard that podcast episode, I forget where it was. In passing, maybe almost casually, I don't know, I had mentioned that I actually cut my own hair, that I actually don't pay money for haircuts. And I have over the years become quite, not necessarily extreme, but very aware and very determined to look for ways to cut costs and to not pay retail, if you will, to not just spend money without actually doing some homework. And this person asks, what else do you do to save money? And so, yes, I do cut my own hair. And nowadays, driving to get your hair cut, number one, that takes time. And number two, it's usually a minimum of $20. I mean, at least $20 nowadays for a haircut. So no, I don't drive to go get a haircut. I walk to my shop and I do my hair, right? That's just the way it is. And I save $20 plus I save the time. And I, read something on my iPhone or, whatever while I'm doing it. I don't have to go anywhere. Now, what else do I do? I buy discount everything. Anything I can buy in general, I rarely ever pay retail. So I have more shoes, for example, than my wife. I have more shoes than my wife, but I only buy discount shoes. So I'll shop at Ross. I've bought shoes on eBay, right? That I do like shoes. I think they're a good part of my work uniform. They're a very important part of my work uniform, or at least they make me feel special, right? But I don't pay retail. So I'm always looking for the deal. If I do want to buy shoes, for example, I will buy them when I get to a place like a Bass shoe store outlet that is having a buy one, get one free clearance deal. I'll buy them at Ross. I'll buy shoes on clearance. I buy discount designer shirts. Discount designer shirts. So I like to have nice shirts, but there's no way in the world I would pay retail at a Nordstrom or a Macy's or just any kind of a fancy upscale store. There's just no way in the world I could mentally pay retail for a $70 or $80 shirt. Just can't do it. So I buy discount designer shirts at places like Ross. I've bought them online. I've bought them at outlet centers with the end of the year clearance sales. And I'll buy them in a particular size that is often larger than it needs to be for me. They're not tailored, right? And rather than pay retail for the shirt, like somebody actually suggested this once, go to Nordstrom, buy the shirt, and then you can go upstairs and the tailor will tailor the shirt for you as well. Well, that's an expensive shirt and an expensive tailor job, and then I get a tailored shirt. Well, how about I just buy a discounted shirt, right? So I buy a really deep discount clearance shirt, which you can find them all over the place. And then I found a tailor in the city near me, a long time in business, great guy. His name is Victor. And I walk in the door and Victor tailors the shirt for $7 to $10, right? So I get a designer shirt half off, let's say, and then I spend an extra $10 getting it tailored, and I have a tailored shirt that would have cost me probably $90 to $100 that cost me $30 to $40. That's the idea. I'm also big on Craigslist and OfferUp and eBay. I needed a shop vac. Recently I needed a shop vac, one of those nice, powerful vacuums for a specific project. And I looked at it retail and I almost bought it retail at Home Depot, right? I went to Home Depot and almost paid, I think, $70 or $80, $90, maybe more for a shop vac, one of their versions of a shop vac. And then I remembered my rule, my personal rule, and I said, no, I'm going to check Craigslist. And sure enough, like in a minute, I was able to find a shop vac that was actually for sale in a city on my way to work the next day. And I met the guy on the way to work. He was on his way to work, and I bought an amazing shop vac, fantastic deal, for $25. $25, right? So I love that kind of a deal, but I now have that shop vac, and it cost me, 75-80% less than it would have if I went retail. I'm going to keep going here, folks, because it was a great question. What else do I do to save money? Well, my wife and I don't pay for cable. We don't pay for DirecTV. We have Netflix only. So we enjoy watching certain shows together, and, when we have TV time at the end of a day, but we only watch Netflix and we rent Redbox DVDs. So we don't pay for any kind of DirecTV packages. We don't pay for any cable, satellite, none of that. That's a huge expense. I mean, in the past, I remember, spending $70, $80, $90 a month on cable TV, and it's just we don't do that. We even switched our phones over to one of those deals where they'll give you half off on your cell phone plan if you switch over to Sprint. I mean, I'll go for that deal because I do find my iPhone is way too expensive in general. However, it has become an anchor point in my productivity and my work life, so I can't get rid of it, and I just need to not spend so much money on it. So we switched over to Sprint, and they gave us a huge deal. My wife does need a new iPhone. We will not get that iPhone from a cell phone store or from the Apple store. We will buy it on Craigslist. We'll buy an unlocked iPhone on Craigslist, and it'll cost less than $200 for a good condition, unlocked iPhone that we can actually plug into our Sprint account, and it will save us a lot of money. A few things here. Those of you who listen to the show, you know that I do broadcast from my own studio workshop. I actually have a wood shop here in my backyard, and I am always finding free stuff for my shop. Free and discounted things for my shop. I love, love, love to do that. I will set my Craigslist app on my phone to alert me when certain things that I'm searching for come up, and I'll find deep discount or free stuff all the time for my wood shop, and I just enjoy that. I enjoy the wood shop, but I just can't stand paying retail without at least doing a little homework. Finally, we use an airline miles credit card, right? So on air travel and travel in general, that's our version of credit card travel hacking, is that we have been customers with Chase and the Southwest Airlines credit card for several, I forget how many years now. Well over 10 years, and we rarely ever pay for airline tickets. So I have a trip coming up to Las Vegas for the big SEMA show, and I was able to just quickly go on the website yesterday, book those tickets using my airline miles. My wife has a trip on her to go to Utah coming up in October, and she was able to book her airline miles without any issue. We don't pay for travel. We don't pay for flights very often because Southwest goes where we want to go. So of all the things, right? So that just gives you a good rundown. I mean, I'm sure there's many more that I could go through, but great question. What else do I save money on? Well, that's it. Here's my thing. Start small. If you think it's crazy to buy discount shoes on eBay or used shoes on eBay, fine. Don't do that. But please, next time you want to buy a shop vac or insert name of spontaneous purchase, please give it a try. Grab your iPhone, grab your Android phone, open up the Craigslist app, open up the eBay app, the OfferUp app, all these apps, Facebook Marketplace. Do a quick little shop right there in your hand. And I'm telling you, almost every single time I have done it, whammo, there that item is, just down the street, way less expensive. You're not going to have to pay retail, right? I told you folks about it a few weeks ago. I bought snowboard bindings for my daughter, snowboard bindings. The ones that I got for her retail for $240 retail. That's what they sell for right now, new. I bought them for $80. $80, right? From somebody that I found on Craigslist. So please give it a try. Start small, and telling you, you're going to find money that you've just basically been leaking out of the bucket for no reason because you just hadn't taken a little extra time to see if you could save a few bucks. Now, next, watch your steps. Segment 1. Last week, I had mentioned the idea of college planning, and as you get ready to fill out your college applications and the free application for financial student aid and stuff, please remember, assets in your child's name are assessed very heavily. They are assessed heavily, somewhere as towards 400% when it comes to gift aid and loans and things that you might then get, okay? So watch for that. If you have questions about it, you can email me at Kraig@kraigstrom.com. That's Kraig with a K. Now, this week, check your actual tax bracket. Watch your step on this. Pay attention to this for a little bit. Just check your actual tax bracket. Look at how much money you made on your taxes last year, and then look at how much tax you actually paid. Do the math and find out what your actual real overall tax rate was. I did this for someone recently, and they were maxing out their 401k, and I asked why, and they said, oh, the tax deduction. Okay, fine. Tax deduction. And I said, well, what is your actual real, tax rate when you add it all up? And they said, well, I don't know. Well, let's do it. And we did it. And we come to find out that with their child tax deductions, their mortgage interest tax deductions, their, tax deduction, whatever, their actual real effective tax rate was well below 20%. So what was happening is that what they were thinking is they were putting in this money into their 401k and they were getting this big tax deduction. Well, in reality, there's no such thing as a tax deduction on a 401k. It is a tax deferral. A tax deferral. Now, and what they're doing is they're tax deferring it today at a 20% rate. So let me ask you this question, same question I asked them. Do you believe that taxes will be higher or lower in the future? Well, if you're like everybody else that I've ever asked that question, everybody says they're going to be higher. Well, if taxes are going to be higher in the future, when you have no kids to deduct, no mortgage to deduct, no business expenses or travel expenses to deduct, is it possible that you might be in your lowest possible tax bracket right now with all those deductions, and when you take the money out, you don't have all those deductions anymore, right? So what can you do instead? Talk to your employer to find out if they offer a Roth contribution into the 401k. A Roth contribution goes in where you pay the taxes today, but you get to take the money out tax-free in the future. Right? So ask for that. A lot of employers actually will offer a Roth contribution option. And also, depending on your tax rate today, once you've figured that out, you might consider doing a Roth conversion, taking an old IRA and converting it into a Roth. When you really think about it, if your effective tax rate is very low and lower than you expected, maybe it is a good time to consider a Roth conversion. If you have questions about that as well, Kraig@kraigstrom.com. I am happy to help. Now, segment 2 today, our second portion here, had a couple of things come up. There was very good. This is an observation and then a question. So last week I had covered the question of, do you need a living trust and do you need an LLC? Let me see if I can get my words right. The question from a listener was, do I need a living trust? And then another asked, do we need a limited liability corporation? Please go back and listen to that episode. If you have any questions about living trust, I work with a fantastic law firm. As a financial planning professional, I also have a lot of experience helping people through the living trust questions, the limited liability corporation questions. Please go back and listen to the previous episode and then send me an email. Happy to chat. Now, this week, this is an observation of mine from a conversation that I had with, let's call this person Stephanie. She works with a major marketing firm in LA, in Los Angeles, okay, not Louisiana. Major marketing firm in Los Angeles. She has a huge paycheck. Now, this is a recent thing, so this is an observation that I had actually after chatting with her. She has a huge paycheck, but her calendar is completely out of control. She just works like crazy. She makes over $600,000 a year, but she works up to 80 hours a week. She works hard. She is married. She's got kids. I don't know how in the world she survives, right? Her work contributed to the downfall of her first marriage. That's in her own words. She knows that her work contributed to the in part to the failure of her first marriage, just because she works so many hours. So she is remarried and she still has kids, but she is a perfect case of Parkinson's law, where her lifestyle, her living expenses, everything has risen to the level of her income. So now she works to pay for the lifestyle. She works to pay for the overly expensive house in the LA suburbs. She works to pay for the overly expensive car. And there's just no possible way that she can save enough money to maintain that lifestyle into a retirement in the future, to maintain that income level. And this was a light bulb moment for Stephanie. Light bulb went on and she said, why am I working so hard then? She realized there's no way mathematically, and barring some huge deal where she creates the next Google, there's no way for her to save enough money, because her lifestyle inflation has risen up so much to match her income. She can't save enough money to actually then maintain that kind of lifestyle into retirement in the future, right? And she had that realization, well, why in the world am I working so hard? Why am I spending so much time at this job? And I am able to help her increase her retirement income target. I can help her in a huge way improve the amount of retirement income she can look forward to. But it would be nearly impossible for Stephanie to reach and maintain anywhere close to the current lifestyle that she pays for. Truth be told, she's really not happy in that lifestyle anyway, right? What's not was, I think about this, right? I hope you're paying attention. There's no reason to maintain the lifestyle because she's not terribly happy in the first place. It wasn't a great lifestyle after all. It's expensive for sure, but not great. If you're in this situation where lifestyle inflation, Parkinson's law has come into your world and you find yourself basically working to pay the bills for all the various things that you don't get to enjoy anyway, you might want to consider a conversation with someone like me to help you understand what your retirement income picture looks like right now, right? What does your retirement income picture look like so that you can have some realistic expectations, right? So you're not just blindly going along thinking, I'm making a ton of money, everything's going to be great. Well, if you don't know what your retirement income picture looks like 10, 15, 20 years down the road, then you don't have a clear picture of where you're going and whether or not all this hard work is actually going to pay off or not. Wouldn't it be nice to know sooner than later that maybe you're overworking yourself? Maybe that what you're doing now is really not leading to a destination that you're actually going to look forward to anyway, and it might be a good time to get a reality check and then turn the bus in a different direction a little bit, right? And that's what I'm doing actually with Stephanie, is that we are talking about how to turn the bus in a different direction. Right? That's the key here. Does she really have to work 80 hours a week to match now what her retirement income projections are more realistically set? Probably not. Going to be able to make a big difference in her overall lifestyle today, her family life today, her time with her kids today. It's when would you want to know about it, folks? Sooner or later? I hope it's sooner. You can get with me. We can actually do a retirement income analysis. We can talk about what you're on track for today so you can really put things in perspective. Now, going to finish with this question. This is a great question that came in. And this person said, thank you. Thank you for the time you spend on the podcast. Well, you are welcome. I appreciate the different perspective you bring to financial matters. And then they go on to say, I listened to another financial show recently and the hosts received a question about long-term care insurance. They said that it probably was not worth buying because you could self-insure by the time you needed to use the insurance. What are your thoughts about long-term care insurance? Good question. Thank you so much for listening. I really appreciate it. So this is a question about long-term care insurance, but also a great example of perhaps listening to financial entertainers on another podcast or another show that get a question from somebody and then answer it for that person saying, you probably don't need to get long-term care insurance. You could self-insure. Well, I disagree with that, okay, because if self-insuring worked, then we should all cancel our home insurance and our car insurance, because the likelihood of a long-term care event, and just for the record, what is that? That is stroke, that is paralysis, Lou Gehrig's disease, Alzheimer's, right? When you think about the event like long-term care, the likelihood of a long-term care event in your life is much greater than a house fire, folks. It is true, absolute fact that the odds of a house fire are far, far less than the odds that you or your spouse will end up needing long-term care someday. I mean, exponentially different. So, if this idea that we should all self-insure was actually true, then just go ahead and cancel your car insurance, cancel your homeowner's insurance. You don't need all that stuff, right? Of course you're not going to do that. Insurance is about transferring a risk for a relatively small amount of money, right? So think about this. I read this or listened to this story over the weekend. And this is a very extreme example, but hear me through. A man in Texas has had his house flooded now 5 times. 5 times. The National Flood Insurance Program has rebuilt his house now for the 5th time with an estimated $1.8 million in rebuild expenses. His insurance premium for his flood insurance is $4,500 per year. $4,500 per year, and his house is now going to be rebuilt 5 times. You cannot self-insure that, obviously. This is an extreme example. Use another example, okay? If you have a situation where you've got car insurance or even home insurance, right? Let's use home insurance. And half of the living room burns down and it costs $90,000 to rebuild that half of the living room, right? How much are you really paying for homeowners insurance over the years? You haven't paid $90,000 for it, and all of a sudden the insurance kicks in and rebuilds the living room for $90,000. Right? That is a huge return on if you looked at it as an investment, which it is not. But if you looked at it that way, a return on your dollar, insurance is an amazing thing. We are transferring risk. But this idea that long-term care insurance should be a self-insurance kind of thing, well, what I say is, man, I hope you don't have a stroke before you have enough money to pay for it, right? And that financial entertainer on the radio or the podcast, they're not going to be there to write you a check when your husband or your wife is paralyzed in that car accident or comes down with early onset dementia in her 40s or 50s or has Lou Gehrig's disease, right? They're not going to pay for it when you don't have enough money yet saved up. You didn't make it all the way to 85 when you were supposed to have your long-term care event, right? The idea with long-term care planning is that it comes in one of three different options. You can self-insure. You can self-insure and hope you have enough money, like right now, just in case. And if you don't use it, whatever you had saved up goes to your kids. Got it. Check. Number 2, you can buy regular long-term care insurance. It's really like a monthly insurance that you can pay for. It's like car insurance. If you don't use it to cover long-term care expenses, you lose it and you don't have any money left behind for your family, but you were insured against a really big risk. Now, my preference, this is what I plan to do, this is what I have in place for me and my wife, is to buy life insurance-based long-term care coverage. Hear that carefully. Life insurance-based long-term care coverage. So this is the big difference. It is not a use it or lose it. It is a use it or leave it. And what that means is that if in the future, when I have my life insurance-based long-term care insurance, if I have a stroke, the insurance will pay to reimburse for long-term care expenses, et cetera, et cetera. If I simply die, the death benefit from the life insurance, far greater than what I put in, will go to my family. That's it. Someone will always get back more than I paid for it. It's not a use it or lose it. It's a use it or leave it, right? So here's how it looks just for me personally. This is what my long-term care current in coverage planning looks like. Today, in my 40s, I have term insurance, just term life insurance from a specific company that allows for conversion to long-term care insurance if I stroke, if I have a long-term care event. And that's a rare thing. There are not many. I only know one in specific. And if you want to know more about it, email me, Kraig@kraigstrom.com, because this is a big deal. If you don't have this kind of conversion option, and you probably don't, on your term life insurance, you really owe it to your family and yourself to find out what we're talking about here. Term life insurance offers convertibility to a cash value type of insurance, but in this company's case, that cash value type of insurance is actually their long-term care insurance. So I have term insurance while I'm younger that says, hey, if I die, my family gets a death benefit, but if I have a stroke, I can convert my inexpensive term insurance into long-term care coverage, okay? And then later in life, probably in my 60s, I will convert a portion of my savings to purchase a single premium or a monthly premium life insurance-based long-term care plan that I can have to cover me for long-term care risks. If I use it, too bad for me. If I don't use it, my daughter will get a tax-free death benefit from the life insurance company because I didn't use it for long-term care, right? If you want to know more about this kind of long-term care planning, please email me, Kraig@kraigstrom.com, Kraig with a K. And this is great for you, but it's also great for your parents. Remember, if you're listening to this in your 30s and 40s, even your 20s, 30s, 40s, 50s, who are we talking about here? We're talking about your parents then, right? You got to look at this for your parents. They might need this kind of coverage. It might be a great way to protect yourselves from the risk of long-term care in the family and put your parents in a very good position that they won't be in a use it or lose it or that scary self-insurance mode. Now, that's going to wrap it up for me today. Really appreciate the questions, the observations. Thank you for pulling a little bit of that deal of the week and my cheapskate self out of there. And please, if you're finding yourself in that lifestyle inflation and why am I working so hard mode, I'd love to have a conversation with you about it. And I'd also love to chat with you about long-term care planning. It's super, super important. You can always reach me through my LinkedIn profile or Kraig@kraigstrom.com. And I really appreciate all the support. Take action. Remember, the future belongs to those who take action. Get out there, actually do something about what you've heard here. Get fired up. Do that today. Take care. Have a great one. Talk to you soon.
Thank you for listening to the Personal Pension Radio podcast. If you missed anything during the show, that's okay. We took the notes for you. Check the show notes for links, offers, and a full transcript. And don't forget to head over to personalpensionradio.com and download your free retirement income report. While you are there, we would appreciate some iTunes love. Please leave us a fantastic rating on iTunes by going to personalpensionradio.com/iTunes. Thanks again for listening.
Now for the disclosure. Information presented is for educational purposes only and is not intended for solicitation, sale or purchase of any security or financial product. Be sure to first consult with a qualified financial advisor and your tax professional before implementing any strategy discussed here. The term personal pension refers to a marketing name designed to educate future retirees and retirees about the economic principles behind creating their own pension-like income. The term personal pension is not intended to be confused with a defined benefit pension plan offered by an employer or by a government entity.